Thanks for listening to Things I've Learned. Joining us today is investment guru Jeff Weber. Jeff has extensive experience in AIM investing. His website is jjjinvesting.com, and he has lots of information there that you could explore. Jeff has an expansive educational background with a history and government undergrad from the University of Arizona, then law school, a bachelor's in accounting from the University of Nevada, Los Angeles. He worked for the U.S. Army as an auditor and lived for 17 years in Germany, Korea, Japan, and Belgium. He's written 2 books on investing, Here Are the Customer's Yachts and AIM for Millions with Stock Options. In addition, he has a monthly newsletter showing best investments for his book. Jeff, welcome to Things I've Learned.
Well, thank you. Thank you for having me on your show. It's an honor.
So this is a great topic. Everybody I know is very interested in investing, but AIM is not something I'm familiar with. Can you tell us a little bit about what AIM is and
Yeah,
what it does for the
AIM is,
investor?
AIM is a method of a contrary method of investing, which I'll explain later, invented by a wonderful gentleman named Robert Lucillo in the late 1970s. It's a very simple algorithm that constantly tells you exactly when to buy, when to sell, and how much to buy and sell. Because the biggest enemy of all investors is emotion. And I love to tell people, I said, there's two basic type of investors in the world. And if you remember Star Trek, you'll remember them. There's Bones McCoy and Mr. Spock. And I used to always kid some of my investors and I'd say, all of a sudden this stock is way down and Bones comes running into Jim and goes, Jim, confound it. The damn thing's going to go to zero. Sell it while we can still get a few pennies left. And Spock comes in and goes, Jim, that's not logical. This is a very good stock. It dropped for no reason connected with the company. It had to do with the overall economy, wars, politics, all this other stuff. It will rally. So the best time to buy, obviously, Jim, is when it's at its 52-week low and we wait for it to go back up. So I've seen too many investors who couldn't handle, they would never know when to buy or sell. What good is owning something if you don't know when to buy or sell it? What kind of fun is it to agonize? Oh my God, should I sell it now? Should I wait? If you don't have a strategy, a method of investing, you're wasting your time, and you're really never going to make a long-term lot of profits. It's
Totally
that
makes sense.
simple.
Yeah, having a science behind it and not making those decisions
Right.
based on your emotion and your thought when you're not a pro who's investing makes all kinds of sense.
I make it very mechanical, but that's what most people want. They want it simple. And I always wanted to come up with a way of investing that would make very high returns, that would be very simple to do. And I'll give you the perfect example of how simple my investing method is. I had a guy named Mark Doherty who started in January of 2020. Didn't know anything about AIM investing, didn't know anything about long-term options or leaps, which we'll talk about a little later, which is what I use for AIM. So I started helping him. He started with 550,000. Okay. Well, after 6 months, around the end of June, he decided he had learned enough, and he had a good investing background, so that might probably help him. And he decided he could do it himself. Well, long story short, from January 2020 to December 2020, he made a net profit of $1,250,000 on that 215% profit on his starting $550,000.
That's incredible.
I felt so good for him because he had colon cancer, had a tube, poor guy, and he loved, vacationing in Mexico, and then he would live in Portland part of the year. Well, after I made him that kind of money, I radically changed his life for the better. He had his own custom built house built for him in Mexico for 200,000 of that 1,250,000, and he was able to live the life he wanted to. I felt so good about that. He appreciated me so much. He wrote his own book called I Am a Genius Almost, or something like that. And he dedicated the book to me. That's one of the
Oh
big
man,
honors I've ever had in my life, a book dedicated to me.
that's awesome. Well, so if you could dig into AIM a little bit then and start
Sure.
explaining, some of the fundamentals behind it and how you know those points to buy and points to sell.
Okay, very simple. Okay. Let me give you, here's how simple AIM is. Well, first of all, realize we're going to be doing it with long term options or leaps. Why? Because the options are about 1/4 the cost of the stock. So to give you an idea, let's say you wanted to buy 100 shares of Apple stock. It might cost you $10,000. We'll say it was $100 a share. You would find a leap or a long-term option that is at that strike price of 100, the price of the stock, and you could buy that for 2,500. So it would cost you 1/4 as much to buy one contract controlling 100 options than it would to buy 100 shares of the actual stock. And you still have, like I said, they're long-term options. The ones I'm buying from my investors right now are January 16th, 2026 options. So they have roughly a year and a half before they expire. So you have plenty of time for them. And what I do with regular AIM, I'll explain regular AIM a little later. Here's the beauty of it. The only thing you have to worry about with an option is that they do expire. A stock theoretically never expires unless the company goes bankrupt. So what I tell people is this: if we're doing regular AIM with leaps, the new leaps come out every September. So this September, in the middle of the month, the 27 leaps will come out. So anybody who's doing regular AIM, I tell them, here's what we're going to do. We're going to wait like a month or two, and then we're going to roll over your 26 options to 27 options. Now you have roughly 2 years, 2 months before they expire. So the big enemy of all options is what they call time decay, which means when the option has a month or less maybe to live, as you would say, it's going to start going down just because there's very little time value. See, on an option, there's two costs on them. So, for example, if the stock is $25 and you buy an option that's strike 20, and I would be saying call, which means if you buy a call, the call goes up when the stock goes up. I'm always bullish on America, so I like that idea. So when you buy that, if you pay, for the $25, let's say it costs you $28, $8 to buy that option, you're going to find you really only paid $3 because you're getting $5 of equity since you bought it for 20 and it's worth 25. I like doing that. I found options slightly or a little more in the money work the best for AIM investing, which maybe now would be a good time to explain AIM. Here's how AIM would work. Let's say you buy an option that costs $10. Okay. Now, let's pretend you started with 10,000 in leaps value, the option value. Well, with regular AIM, you always invest an equal amount of cash because you have to have the cash to be able to buy when you get a great opportunity. And I'll give you one quick example of that. I had a guy buy Jet, which is like the Amazon of the Orient. It's a big online computer shopping mall, if you want to call it. And here's what I found. Okay. He bought it at 14 to begin with. it kept going down and down and down because these options are normally 5 times as volatile as the stock. So what I constantly find when I look at it is if I see the stock went up 2%, it's very likely the option went up 8 or 10%. So that's why you like them. I mean, I had one guy with a boring leap called American Express, which, we've all heard of. And his leap went from $3 to $12.50 in one day. So I told him sell every damn one of them,
Right.
because we can come back tomorrow and start over again. I have a lot of quick rules, because the ultimate object is profits, So if you get that many, ignore what AIM tells you to sell every damn one,
Right, right.
So that happens over and over. So what I tell people, so you start with this 10,000 leaps and 10,000 cash. Well, now what are you going to do next? What is your buy and sell? Because that's the whole point. And you want to put them in advance with limit orders. All a limit order means, if you put in a limit order for $10, that means to buy. That means the broker will not execute the order until the price is at least $10. And if you're lucky, about 10% of the time, you get to buy it at a lower price. You might get to buy it at $9.75 or $9.50. I've had that happen about 10% of the time because I've been helping people with leaps for over 20 years. So I have a lot of experience with this. So we'll do that. Okay, so let's pretend he bought at 10 and bought, 20 contracts, we'll say. Because you have to buy contracts when you buy options. You can't buy an option. And a contract consists of 100 options. So if the price is $3 on an option, you have to buy at least one contract for $300. That's just the way it works. So the only difference between trading with stocks and options, with stocks, you can trade shares of stock. With options, you have to trade contracts of options. But that's no big deal. And get this, you want to talk about a bargain. If you wanted to start with 15 options, which is the minimum I recommend for regular AIM, you know how much that would cost you with the broker? It would cost you about $9.50.
Oh, wow.
You couldn't even get a Big Mac meal, especially in California for that.
Yeah, right.
So
right.
It's the bargain of the century. It's the one area of total deflation. You used to have to pay large brokerage fees to trade when I was a kid, $20, $30, $40, Now, you have what I didn't have when I started investing at 8 years old with my dad, because that's my start. We have a little time. I'll tell you that story. And I don't know how my dad managed to. He managed to buy me 5 shares of a Erie Lackawanna stock. To this day, I don't know how he did it, because back then I thought you always only could buy and sell in 100-share lots of, and the commissions were very high. The 1950s when I was 8. So enough of that. Okay, so here's AIM. You buy it at $10. Well, the first thing you're going to figure, what is my buy price to buy more? And since you're a contrary investor with AIM, of course, you're going to buy at a lower price. And from years of experimentation, I have found the best price is to lower the original buy price by 25%. So if you buy at $10, your next buy is going to be at $7.50. Okay. And then the worry you never have to worry about the sells because you never do anything unusual with them. They take care of themselves. But on buys, every time you make a buy, you're reducing your cash total. Okay. So here's what I decided, and I kept it simple again. The second, if you buy at $7.50, your next buy is going to be 25% lower, or roughly $5. Now you're buying at 50% the original price of your leap. Okay, boom. So you buy more of them. Well, what you would find probably after the 2 buys, if you had the 2 buys, Your cash total has gone from 10,000 down to 6,000. Okay, you still have 6,000, 60% of your cash with your leap at 50% of its original value. Well, now I'm beginning to think either this one stock or the whole market is in a bear phase, and the next it's likely to drop some more. So I want to conserve cash and buy at the cheapest possible price. Again, I keep it simple. For the third buy, I invoke my bear buy rule. And what is that? Instead of dropping the price 25%, I drop the price 50%. Believe me, you can do that. So since you just bought at $5, half of $5 is $2.50. Well, you have 6,000 cash. 1/3 of 6,000 is 2,000. You're still going to have 4,000 in cash left. With 2,000, you can buy 8 contracts, 250 times 8. So you're getting almost half your original purchase price at the price of 2,000, So you can see how you're constantly dropping your break-even point. Now it's much lower. It never needs to go back to 10 for you to make a profit.
Oh,
And
that's
I have
great. Yeah.
found, I have found that is very, very effective. And let's say you made one more buy, then I would invoke my super bear buy rule. So you can see you're never going to run out of cash. You started now you have 4,000 in cash. Well, what's 1/3 of 4,000? Roughly $1,333. So you can now buy 13 contracts at the super bear buy price of $1. You cut the 250 in half, and then you dropped another quarter and made it an even $1. Boom. Now you can buy 13 contracts at $1 for $1,300. Guess what? You still have $2,700 left. So you can see, now that you're never going to run out of cash. And I give you the example of when that worked. I had a guy, like I said, the guy bought Jet. Well, I managed his cash so well with bear buy and super bear buy. He went from owning 15 contracts to owning 138 contracts. And his leap went from $14 to 38 cents.
Oh,
I mean, that can occasionally happen with a risky one.
sure.
But we didn't give up. We still had, 8 or 9 months of time left because we're buying long-term ones. So I told him, I said, why don't you decide? I said, you actually don't have enough money to roll it over to next year's leap. We were doing regular AIM with it. So I said, why don't you pick a price that you're happy with, and we'll get some money out of it before, we lose everything, because the only way you can lose everything is if you hold it till it expires, the following January. So he did that. And he figured out the price of $3.50 on his leap that was worth 38 cents. And I asked him, I said, why did you pick 350? And he said, I figured out at 350 I break even. Even though I originally bought at $14, I break even. Well, the company, Jet, was an excellent company, but the Chinese government had been messing with them for years, and investors didn't like that. Well, I guess the Chinese said something good about it, because next thing you know, within a week, it went from 38 cents to his 350. He made a profit on that trade alone of 28,000 and got back to even.
Oh my gosh, that's amazing.
So,
Well, one of the things that you're kind of alluding to, I think, too, is you have to pick the companies that are going to be the
right,
good
and
investments.
it's very easy because I have created my own list of all the 26 leaps. And I actually looked them all. There's roughly 500 stocks that have leaps. Now, I went through with a fine-tooth comb and found about 200 of them work the best for AIM because they have good ownership and they have good trading. And what's amazing is options have not been discovered by the real world. Any given day, get this, I'm literally a market maker in AIM. One day, I looked at Apple. You've heard of Apple, I'm sure. Very popular stock, trades 50 or 60 million shares a day, at least. Okay. Well, one day I was doing some buying for me and my clients, and I looked up the leap because they give you the information on trading and all the other stuff. And I saw for the day that Apple had traded 150 contracts at the particular strike price that I was using. I was responsible for the trading of 130 of those 150.
Wow.
I was like the Goldman Sachs of leaps.
Wow.
And, if you do a statistic on investors, you will find roughly 90% of all investors do not own an individual stock. They own mutual funds. Maybe they own ETFs, whatever. I don't know. Bonds, whatever. Well, you think 10% is small. Check out the percentage that own an option, and it's like 1%. Because
Right.
options are bad-mouthed by all the many financial advisors. They will never tell you to buy an option, even if it's dirt cheap, which it is right now. And options can have incredible high and lows. And get this, if you're a fanatic for this like I am, I can show you this someday. There's actually a way on Yahoo Finance, when you look up an individual option, to get a chart. So if I wanted to look up Apple Strike 150 for 2026, I can go to Yahoo Finance, click on what I call the Leaps license plate. I can show it to you sometime. It's easier than trying to explain it. And you can look up and see exactly the highs and peaks and valleys on that option. And I can show you options 3 months ago that were like $7. Today they're $21 3 months later.
That's incredible. Wow.
So that's why I like options. They
Right.
have, they are, because all the stock market is, and people don't realize this, there's actually some people not too smart, I think, who don't think the stock market should ever go down. Well, I tell them, guess what? If an investment always stayed at the same price, who would buy it? So
Right.
it needs to go up and down to make people want to trade it. Very, very simple. And
yeah, totally makes sense.
It's to me like a no-brainer, on this. And so and I tell them, I said, it works. You have to be patient. You've got to, kind of park your emotions every now and then when you're having a bad spell, and realize the reason AIM works is this. We are contrary investors. We're a very small minority. But I tell people, think of it this way. Can you turn a speedboat around faster than an aircraft carrier?
Of course.
So a big California pension fund, or, the big mutual fund at Merrill Lynch or somebody, you think they can, they can't always do what they want. They have quarterly averages they have to be in the Lipper gauge or something like that, and not drop out. Well, I can turn my speedboat right around real fast, and at 65 cents a contract, a lot of trading isn't going to hurt me.
Yeah, sure. Well, so this sounds like, there's obviously a lot of, study and background that you've had to get to where you are. How much time do you spend? Like, let's say you've trained somebody in how to do it. How much time would they spend a day, do you think, doing what they would need to do?
The only thing they need to do once they learn it from me, they would look at how their leaps finished at or near the end of the trading day. They would compare it to the buy and sell prices at the bottom of their spreadsheet that I have provided for them if I'm doing their sheets for them, or they could be doing it themselves. And they would first of all, if they don't have a buy or sell, they're done. it would take them 30 seconds, to do it. If they have a buy or sell, let's say they own 3 leaps. To do 3 leaps would probably take you 10 to 15 minutes to update, and then maybe another 5 or 10 minutes to put in the new orders with the broker. Because what you'd have to do, let's say you have a buy on a leap, whatever. Well, when you go to the broker, you would see you have you still have an old sell order in, because you put in a buy and sell order. So I would have sent you a new buy and sell order. Well, you'd have to cancel the old sell order, put in a new sell order, and the old buy order has already been canceled because you made the buy. So you'd put in the buy order. Like I said, that would take roughly 5 to 10 minutes an option till you get real good at it. And all you'd need is your calculator and a pencil right in front of you to do it. You don't need to look at it all day long. If you'd like looking at it, look at it, But there's many sources for looking up leap prices. I look up all the leap prices on my phone, my smartphone. Here I can even I'll even show you how easy it is. I'm logging in. I go to E-Trade. I type in my password. Here, let me do it with my glasses, and then I can see. You get old, you need glasses. Okay.
I totally am the same way.
Here's what a leap looks like.
You just lift that up just a little bit so we can see the screen there. I think that's below the
I'm
camera.
sorry.
No, you're good. Okay, so right there in E-Trade, you can see all the leap prices, and it looks like various strike prices, right?
All the leaps on DraftKings, the gambling site,
Okay. Uh-huh.
And here's the kind of information you get, because it's a little hard to read. Okay. First of all, it defaults to the shortest term options, July 26, 24, but it has a down arrow. We're looking always right now at the January 2026 options, which are near the bottom because they're in chronological order. Okay. So here's the way I would think on this one. I look at DraftKings and see it's selling, the stock is selling for $39.86. Boom. Okay. I want something in the money. And the nice thing is, all the leaps that are in the money are highlighted with like a light blue. So they're always going to be at the top on calls. Okay.
Okay,
now,
sure.
At 36, I tend to like round numbers. So the first one I would probably look at is the 30. Okay. And what do I find out about the 30? Okay. The 30 doesn't look very attractive. Let me get a better one here. I'll look at Apple, which is better for you. AAPL. All you need to know is the symbol for the stock. The symbol is always slightly different than the stock. Apple is AAPL instead of APPLE, for example.
Mm-hmm. Sure.
So but it's very easy with your broker to do it. You just, they've got all these quickie ways to do it. So I just got to go to A, and then Apple appears. And I look at Apple and see it's $224.18. It was up 13 cents on Friday. Not a big moving day. Okay. Again, I go to the 26s. Now, if it's a 224, I tend to like the 200. Okay. The 200, you see the example like I'm talking about. If you wanted to buy 100 shares of Apple, it would cost you $22,400. If you bought one contract on Apple, it would cost you $4,900.
A huge difference.
For 5 times the profit.
Right.
That's a no-brainer.
Yep.
Okay, so I'm going to look at Apple here. Okay. And I see it's very popular. There's 8,899 contracts owned, 86 traded on Friday. Perfect. That's a perfect kind of leap I like. Give you an idea of why you would want to compound AIM year after year, and just pretending it's like a pension that you're never going to see. See, I was one of the lucky humans. I got hired by the U.S. Army in 1983. That's 44 years ago. That's the last year the U.S. government offered a defined benefit pension plan to new employees.
Oh, wow.
And once they dumped it, everybody dumped it. So
Sure.
now you have to rely on a crappy 401k, which is useless. You won't make any money, enough money to offset the rise in inflation. Realize this: if you have an investment that's making you 3 or 4%, you're not making a profit. You're only losing 3 or 4% a year to inflation.
Yeah,
Now, if you're
right.
doing AIM and you made 50% last year, you can say I actually made a real profit of about 41%.
Right. Well, so
Plus,
what do you typically see then in terms of percent? Because I know a lot of times people will look at things like the
very
S&P
simple.
and
Okay,
say, yeah,
my in the money portfolio grew from 74,000 to 18 years later being at 39 million.
wow.
That's a overall gain from 0 to 3,201%. That works out to a compounded annual return of about 21% a year over 18 years.
That is incredible.
So the beauty of AIM is that you can constantly compound. Plus, in my course that I offer, people, and they can find it on my website, jjjinvesting.com, you will find a couple of videos on using a Roth IRA with AIM. Because the only disadvantage of AIM is it is all short-term profits. So if you live in a big tax state like California or New York, you don't want to be paying taxes on your earnings. Even though, like I used to tell people, they'd complain, oh, I'm gonna have to pay 30% in taxes on this. I'd say, yeah, but if you made 50 or 60% or more on it, you still netted 30%, which is better than the average guy, isn't it?
Right. Right.
If you can't do something, but I tell people, get it into a Roth as quick as you can. There's many other advantages of a Roth. You'd have to read the whole article to learn them. But that's what I tell people. I say, and the beauty of AIM is the fact that it's eternal. As long as they issue leaps, and they will forever, and there'll always be new companies that come along, the new wonder kid on the block that are good to invest in. Like I had one guy, get this, he made 4 sells in 1 week on NVIDIA. It literally went up 25%, 4 straight days, and we had sells.
Wow.
Because I always tell people, profits are like a roller coaster. It ain't going to stay up all the time. It's going to come crashing down. And plus, I tell people, I say, if you don't, for once you'll have a way of investing that makes you a lot of money, and it's exciting. You have thrills and pathos all the time in it. You're going to be smiling big one day and crying hard the next day. But since you have a plan and a method to follow, and I have found from experience, people with AIM make the most money who have an equal number of buys and an equal number of sells. You don't want just all sells. So I come up with sports phrases to reflect what goes on with AIM. If you get 3 sells in a row, and that's hard to do, I call it an AIM hat trick.
For sure.
I don't know what you do for a living, but whatever it is, why do you want to be at the mercy of artificial intelligence or somebody saying goodbye? The robot is taking your job.
100%.
So you really got to look out for yourself. I always tell all my investors, everybody needs a side hustle. but you don't want to drive for Uber. I'm
Yeah,
sorry.
exactly right. Exactly
You're not
right.
going to have a retirement.
Yeah.
I said, wouldn't you rather sit at your desk for 10 minutes and make $2,000, you know? Then go maybe to the beach or something and, have some
Yeah.
good burgers for the rest of the day or something. And
Right.
so the secret in investing is to use your brain and not your brawn. That's the way to get ahead in the world. So, boom, on that. Now, here, let me explain lean aim. It's so simple. I'll give you the example. I had a guy who liked Tesla. This was a while ago when Tesla was really doing good, roaring very well. Well, I told him, I said, let's do lean aim with one contract on Tesla. That contract cost him $5,000. So he controlled 100 shares in the money on Tesla. We immediately put in a sell for 25% higher, which is 6,500. He got that sell a month later. Now we had 6,500 to roll over. So that's what you see in those binders I just showed you. Those are about 400, 450. I can't count them. I don't have time. I don't care. Just in those lean aims alone for 14 months, I'm willing to bet there's close to $500,000 in profits in there. And that's, the very first one was perfect. I did one on TQQQ because one of my favorite investments in AIM is index funds. TQQQ represents the NASDAQ 100 technology companies. SPY is another good one. It follows the S&P 500. So it's less risky than doing one stock. But one stock can make you a lot more money occasionally than an index. But both of those are very volatile and you get plenty of action. So I like to mix indexes with the other ones. So I tell people, I say, the ideal portfolio with AIM would have some, if you had $500,000, and I have people that do, I would probably get you 2 or 3 regular AIM and 2 or 3 lean AIM, because that way you can cover expensive ones and still make a fortune on them. And I even had one guy who bought 15 Microsoft contracts and just did lean AIM with them because he didn't have enough to cover the cash. And we made a sell within a month for about a $58,000 profit.
Oh my gosh. Incredible.
So, and there's just more where that came from over and
Yeah.
over and over. I've seen nothing that's ever changed for the worse that knocks AIM out of the game being done by anybody over the last 20 years. It's the same game with nobody doing it but me.
Well, this
I
is
find it staggering that I'm so smart and they're so dumb.
well, this is a absolutely fabulous story. Obviously, I'm very interested. I want to learn more about it. But I would like to end with something that it sounded like you probably feel pretty strongly about, which is your dad, like the story of your dad and how
Oh
you
yeah,
guys
my
got
dad.
in started.
See, my dad actually helped. My dad was actually a contrary investor. What does that mean? He was contrary in the sense of the Great Depression killed any interest he ever had in the stock market, and he never bought a stock in his life. That's why he left us nothing. No legacy, no nothing. If he had bought anything and just held on to it in the 50s or 40s or 60s, we'd be billionaires. But he didn't. So that was an important lesson to learn what not to do. And then I lived. I had several great breaks in life. One of the best is my dad moved us from New York City to Ramsey, New Jersey in 1951. Well, through the heart of Ramsey, New Jersey ran the Erie Lackawanna Railroad. It was the classic 4-track railroad with commuter trains on the inner and outer tracks that took people to and from New York City to work. And then the inner tracks were freight trains going God knows where. Well, for some reason, I don't know to this day, I love trains, both the big ones and the little model trains, you know. And get this, you want to talk about a billion to one shot. I was in the Ramsey Library one day looking at the magazine rack, and I see a magazine called Railroad Model Craftsman, a model train magazine. Oh, okay. I said, let me look at it. I like model trains. Well, I read everything. I couldn't believe it when I read this. The magazine was published in Ramsey, New Jersey,
Oh, wow.
literally in a building right next to the Erie Lackawanna through the downtown. I'm in high school back then. I said, I'm going to go over there and see if I can get a job with them. You know, I got a job after school as a shipping clerk for like an hour and a half a day. It was great. Well, the story even gets better. My boss was this wonderful gentleman named Harold Karstens. He was the public, you know, he was the editor and ran the office. Well, it turns out the magazine was owned by this eccentric millionaire named Charles Penn, who lived in the ghost town of Bumblebee, Arizona, near Phoenix. Well, you know, Hal decided one summer to drive out and visit Mr. Penn in Bumblebee. That's a long drive in the 1950s, 60s. I'm sorry, it would have been the 60s. Well, he came back with all these beautiful pictures of deserts and cactus. And I had been living in really crappy snow and rain and cold and heat in New Jersey. And I said, the hell with New Jersey, I'm going to college in Arizona. So I wound up going to college at the University of Arizona in Tucson. One of the greatest decisions I ever made in my life.
Oh,
Made
wow.
many great friends. Get this, my tuition and everything back then, including 800 out-of-state tuition, was 2,000 a year.
Oh, my gosh.
You can't get a course for that anymore.
Yeah, true enough.
So,
Well, so hey, really appreciate you taking the time to go through this with us. I'm sure that I'm going to get a lot of questions.
and
So I'm going
you
to send
and
them in your
tell
direction.
all of your viewers, anybody can write me again at JEFFEE13 at hotmail.com. And once I get their email address, I will send them my free book. I'll send them my latest newsletter and a bunch of other free AIM material. And you can check it out in more detail and see if it's right for you. I can't see how it isn't right for you.
Right,
If you
right.
have a better way to invest than I just told you, please tell me because I've never found it.
Thank you so much. This was a great conversation. Really
Yeah,
appreciate
I
it.
try and offer great advice for people that will help them forever at a very low cost if they want to pay me, and it's well worth it because I know a lot of stuff and I can't put everything I know out down there, but I tell people the best way to learn AIM is sign up with me. I will give you good ones to initially buy because you won't probably know them.
Right.
And if you have a stock you like, tell me about it. I'll look at it and tell you if it would be a good candidate to do AIM with.